The U.S. state of Wyoming is synonymous with international business. Entrepreneurs from all walks of life from all over the world want their Wyoming LLC. In this video, the complete guide, everything you need to understand about Wyoming LLCs in 2026. Hello, my name is Javier Correa. I'm the tax director here at the Rothbard Group, and I'm also a licensed enrolled agent, fully admitted to practice before the IRS. Let's talk about Wyoming LLCs. So, number one, the first thing you have to understand is that if you are a non-resident alien, which is a fancy way of saying you're a foreigner for U.S. tax purposes, i.e. somebody who is not a U.S. citizen, not a green card holder, and not somebody who lives in the U.S. full-time enough to trigger tax residence under the substantial presence test, then a Wyoming LLC is probably one of the last entities that you can form in this world that gives you tax neutrality, as well as full privacy and anonymity, and easy access to top-tier banking. Those three things rarely combine, and yet you find them in the Wyoming Limited Liability Company. So let's first talk about the Wyoming LLC from the formation perspective. So a limited liability company is very simple in terms of how it is structured. Like if you compare it to a Panama corporation, for example, that requires shareholders and a 3-person board of directors, and then that board of directors has to appoint officers and so forth. There's a very rigid, almost nation-like governance structure that is built into the entity just from the get-go. The LLC in the United States, in particular in the U.S. state of Wyoming, is very simple to operate. You only require a minimum of 1 member. The member is technically the owner, right? What you would call the shareholder if it were a corporation, but in this case, we call it the member. And you need at least 1 manager if it's going to be manager managed. When you open a Wyoming LLC, you can choose to have it member managed, in which case the member or the members, if there are multiple of them, essentially are the ones that manage the day-to-day operations of the LLC directly. Whereas if it's manager managed, the members appoint 1 or multiple managers to oversee all of the LLC's operations. But unless you want to reintroduce the figure of the board of directors and you want a more rigid structure by design, you are not forced to actually have that within your Wyoming Limited Liability Company. Now, in addition to that, what many people love about Wyoming, and I have, mixed opinions about this, and you've seen this in my other videos. I'm not necessarily a huge fan of this in every single context, but for those of you who do want that absolute privacy and anonymity, one of the main advantages of a Wyoming Limited Liability Company is that the managers are not part of the public record, and the members are not part of the public record either, meaning that both the owners of the LLC and the managers of the LLC can be completely hidden from the public eye, from the public record, which is a major advantage that few other jurisdictions currently can offer you as a global investor, as a global entrepreneur. Now, because of this level of privacy and anonymity, the other thing you're going to want for your Wyoming LLC is an operating agreement. Now, an operating agreement is something like a hybrid between a shareholders agreement, bylaws, and a corporate charter. So in a corporation where we have more of a rigid structure, we would normally design 3 separate documents, right? The shareholders agreement is one thing, the bylaws are another, and the corporate charter is another. Sometimes here at the Rothbard Group, because we develop bespoke corporate charters, our corporate charters are so robust that some of our clients just do not have any need for bylaws or shareholders agreement, or rather they will just have very simple versions of them because the charter covers most of the bases that need to be covered. But in the case of the LLC, because it's a simpler structure, the operating agreement essentially concentrates everything. Now, an operating agreement is key in order to make sure that your LLC is not treated as an alter ego, in order to make sure that there is no veil piercing, meaning that your LLC is truly respected as an independent legal person and that its legal personality is truly recognized by courts. That is going to be fundamental regardless of whatever state you form your LLC in. However, in the state of Wyoming in particular, it is absolutely mandatory because it is the only document that will be able to show a banker, for example, who has the right to manage the LLC, to open bank accounts, to close bank accounts, to move funds, to sign contracts, and who the owners of the LLC are when you have to show who the UBO of the structure is. So technically speaking, while, for example, we would always recommend that you have your operating agreement for an LLC, even if it's formed under the laws of the state of Florida or California or New York or whatever state, in Wyoming, it gains significant more importance because of that anonymity angle. So a well-drafted operating agreement is an absolute must in the case of the state of Wyoming. And this is even if you are a non-resident alien, right? Meaning a Canadian, for example, a French person, a British person, doesn't matter. You need your operating agreement. Now, once you have designed all of this governance structure, manager, manage, member, manage, you have your full operating agreement, all of that, you've formed your LLC. The other thing you have to be mindful of, and for our clients here at the Rothbard Group, we obviously take care of that on a yearly basis, is that you have to file your annual report with the state of Wyoming. You have to make sure that your LLC remains active with the state of Wyoming to ensure that your entity remains in good standing. Now, furthermore, in addition to all of these items, here comes the tax neutrality side of everything, right? So the tax neutrality of a Wyoming LLC comes from the fact that in the United States, limited liability companies are essentially transparent entities by default. If you have a single member limited liability company as a foreigner, like I said, a non-resident alien, somebody who's not a U.S. citizen, not a green card holder, somebody who doesn't spend enough time in the U.S. To trigger the substantial presence test, your Wyoming LLC, treated as a disregarded entity for U.S. tax purposes, that's the single member, essentially does not exist. That's what disregarded means. It's a phantom LLC. That's how I like to call them myself as a tax professional. It's just a ghost. It does not exist for U.S. federal income tax purposes. So if your U.S. LLC, single member, does not generate any effectively connected income in the U.S., any FDAP income, so that's fixed, determinable, annual, periodical income in the U.S. So in other words, it doesn't generate any U.S. source income. You essentially have foreign source income flowing through the ghost entity to a foreign member that is not taxable in the United States, even if you have U.S. clients, even if you have U.S. banking, even if you have a U.S. mailing address, even if you have U.S. payment processing. All of the financial infrastructure the U.S. can provide, you can have it and still preserve tax neutrality. Now, if there are multiple members in the LLC, then the default treatment is partnership taxation. And with a couple of differences here and there, more from the administrative side, you achieve the same result. If the partnership is only generating foreign source income, that income flows through the partnership. Multi-member LLC is adjudicated and allocated to each of the members, and if it's only foreign income being allocated to foreign members through a Schedule K-1, for example, then again, the end result is no U.S. taxation, even if the Wyoming LLC has a Wyoming mailing address, has U.S. bank accounts, U.S. financial infrastructure, and everything I described earlier. Now, just because they are, in both cases, whether it's multi-member or single member, just because tax neutrality can be achieved does not mean that you don't have a compliance duty every single year with the Internal Revenue Service. That's also something that we handle for clients on a yearly basis. So if, for example, you're a single member limited liability company and you're foreign owned in the context that I just described, you have to file Form 5472 every year. That is basically a reporting form. It's an informational form where you report related party transactions. Very important. The penalty for not filing this form or for not filing it properly could go up to $25,000. So you want to make sure that you get it right. Even if you don't owe any tax, that form is crucial. And on top of that, you also have to file an 1120 pro forma. You have to file that every single year, April 15th of every year. Even if you're a foreign owner, you have to keep up with your obligations in terms of admin and reporting with the IRS. If it's a multi-member limited liability company, you have to file your 1065 partnership tax return. So when it's a partnership LLC, multi-member, I tend to like those better because there's a full tax return. Remember, Form 5472 is just an informational transactional basically report where you outline related party transactions. Form 1065, on the other hand, is a full tax return. So it's a bit more complicated to prepare, but it gives you more economic substance. It is more robust and it's more presentable to banks and to counterparties around the world. There are many other videos where I've discussed the advantages of multi-member LLCs versus single-member LLCs. Here at Rothbard, we're firm believers in the multi-member. However, we use both for clients, and both of them ultimately can be useful depending on your own individual facts and circumstances. So Form 1065, you will have to report your full gross income, your expenses, potentially your deductions, although if you're tax neutral, you won't have any of those. And then ultimately what you have is profit that is then allocated to partners. You're going to have to file Schedules K1, K2, K3, because obviously you're foreign owned. A lot of technical details. A professional like the Rothbard Group would handle that for you. And ultimately, you have to file that March 15th of every year if you are a foreign-owned multi-member Wyoming limited liability company. Now, assuming you're in good standing from the corporate perspective, you have your operating agreement, everything is dealt with properly, you have your taxes in order, you can also then obviously open your US bank accounts. Now, I have a lot of clients that tell me, well, Javier, I have a Wise account or a Mercury account or Air Wallets. All of those are fantastic options. You know, I believe in them as a kind of like a solution for $10,000. But as I always say, if it's a solution for $10,000, great, but it's not a solution for $10 million. And while all these digital, fintech solutions are great when you can't fly to the US or you're unwilling to fly to the US, I always tell my clients that if you have all your documentation in order, if you have all your tax obligations also in order and your compliance in order, you can fly to the United States and gain access to bank accounts at top tier American banks, from mid-range banks like, BMO or Truist, for example, all the way up to the big four banks, Bank of America, JP Morgan Chase, Citibank, Wells Fargo. Here at the Rothbard Group, we assist our clients in opening these accounts, and honestly, the success rate is overwhelming. Even for foreign entrepreneurs and investors, you can get access to these accounts, again, provided that all of your documentation is in order, that your entity's in good standing, and that you're in good standing with the IRS. You should not have any issues accessing these top tier accounts at these top tier banks, which obviously is going to make your business day-to-day operations much easier, because invoicing clients all over the Western world using an American bank account just makes things a lot easier. And then on top of that, the other element that I would add for your Wyoming LLC, which is something that no non-US entity can provide, is the fact that the US is a non-signatory to the Common Reporting Standard. The US is the only major economy on earth with robust financial infrastructure that has not signed on to the Common Reporting Standard, meaning that when you are onboarded at a US bank, you only have to worry about FATCA. So the United States has no automatic information sharing with any other country. So when you come in with an American company using an American address, using, basically explaining you have an American business, even if it's tax neutral, you will be able to access these top tier banks with, in record time, meaning that you can go into the United States, essentially get your account open within 15 to 30 minutes, depending on how complex your case is. And that is much smoother compared to going to an offshore bank that is within a CRS jurisdiction that will require a lot of back and forth, determining where the entity is tax resident, or want more questions regarding you as the UBO. And so ultimately a bank account opening process outside the US, right, is going to take maybe 4 to 8 weeks, whereas an account opening process for a Wyoming LLC in the United States could take, like I said, 15 to 30 minutes if all of your documentation is in order. So as you can see, the Wyoming LLC is truly a superpower. Like I said earlier in the video, it is extremely rare nowadays to find a jurisdiction that can offer excellent financial infrastructure, that can offer legal stability, that can offer speed of incorporation and simplicity when it comes to management the way the Wyoming LLC does. Now, is Wyoming the be-all and end-all? Not necessarily. I personally believe that a Florida LLC could make a lot of sense for many clients, and it's often an overlooked option because Wyoming has such great marketing. However, here at the Rothbard Group, we formed more Wyoming LLCs than anyone else. We form them for clients every single week, and we know them like nobody else knows them. So if you want to understand the Wyoming LLC from the corporate governance perspective, from the regulatory perspective, from the tax perspective, from the banking perspective, and you want to turn that Wyoming LLC into the super aircraft carrier that it can become if you have everything in order, then look no further. Rothbardgroup.com. We look forward to working with you, and I'll see you in the next one.